Welcome to the Deep Dive. We're here to cut through the noise on some pretty complex topics, give you those need-to-know insights, and do it fast. Today, we're tackling something, well, absolutely business critical, FMCSA trucking insurance requirements. That's the Federal Motor Carrier Safety Administration, for anyone new to this. And our focus, it's sharp. We're looking at the big shifts coming in 2025. Our mission for this deep dive is simple. Take all the crucial info from our sources, pull out the essential nuggets, and make this whole complex regulatory thing, well, clear? Actionable? Think of it as your shortcut, your update, distilled down to keep your wheels turning safely, legally.
Yeah, and this really isn't just about ticking boxes on some form. It's incredibly timely. Vital, actually, for anyone already in trucking or even just thinking about getting into it. These aren't guidelines or suggestions. This is the law, full stop. And, like our sources really highlight, missing even one detail here, the consequences can be huge. We're talking serious fines, daily fines, or getting your operating authority suspended, or worst case, losing the business entirely. The stakes are just incredibly high.
Right. We get that insurance is important, but let's unpack that. Why exactly is this specific FMCSA insurance such a non-negotiable? What does it really protect?
Well, think of it like this. It's your business's financial firewall. It stands between you and, frankly, potentially catastrophic financial ruin. Just imagine a scenario, an uninsured semi-truck accident.
Yeah.
You've got the chaos, sure, but then the driver might face massive medical bills personally, the company, crippling lawsuits, and the FMCSA. They could literally shut down your entire operation. So it's way beyond just paying a premium. It's about securing your whole livelihood.
That definitely paints a picture, that sobering one. So, okay, beyond just this idea of a safety net, what specific things does the FMCSA mandated insurance actually cover? What are those critical areas for carriers?
It's really designed to cover the huge liabilities that just come with commercial trucking. So first, injuries to other people. That means their medical bills, potential lawsuits if your truck is involved. It also covers damage to other vehicles, cars, trucks, or even property, like fences or buildings. Then there's the cargo itself, lost or damaged freight you're hauling. And don't forget legal fees, fines. Those can stack up fast after an incident. The bottom line, the core principle from FMCSA is operate commercial trucks, you must have their approved insurance, period. No exceptions. And honestly, it's for good reason. It protects the public too.
Okay, that foundation makes sense. So let's get down to brass tacks now. What are the specific types of coverage and what are the minimum amounts carriers absolutely need for 2025? This is where the details really matter, I imagine.
Absolutely. And the FMCSA sets these minimums, but they're not one size fits all. They actually vary. It depends on things like what you're hauling. Is it general freight or something hazardous? The truck's weight matters too, the gross vehicle weight, and whether you operate interstate, meaning crossing state lines. So the big one, the absolute cornerstone, is primary liability insurance. Its purpose is simple. It covers damage or injuries your truck causes to others. Third parties. For 2025, the minimums are pretty clear. For general freight, non-hazardous stuff, you need at least $750,000 in coverage.
Okay, $750K.
But if you're running heavier vehicles, those over 10,001 pounds, that minimum jumps up to $1 million.
$1 million.
$1 million, right? And then for hazardous materials, hazmat, the requirements go way up. Depending on the specific material, it's anywhere from $1 million up to $5,000.
Wow, okay. So just to make that concrete, using an example from our source, if your truck rear-ends a car, that liability insurance pays for the other driver's repairs, their medical bills. But, and this is key, it doesn't cover your truck's damage or your driver's injuries, does it?
Exactly right. That's a really important distinction. That's where other types of coverage come into play. Which brings us to cargo insurance. Yeah. This one is about protecting the actual load, the freight you're hauling. Simple function, covers lost or damaged freight. Now, interestingly, FMCSA only mandates it for household goods movers. For them, it's a $5,000 minimum per vehicle. But for almost all other freight, while FMCSA doesn't strictly require it, good luck finding a shipper who will give you their business without it, they almost universally demand proof of cargo insurance.
Makes sense. They want their goods protected.
Exactly. And typical coverage amounts, they can range pretty widely, maybe $10,000 on the low end, up to $100,000 or even more, depending on the value of what you typically haul.
Right. So like the example, if a trailer overturns and destroys a shipment of, say, expensive electronics, cargo insurance is what pays the shipper back for that loss. It protects your client and your reputation, too. Okay, so those are the essentials. Liability, cargo. What about other coverages? Things that aren't maybe strictly required by FMCSA, but are, well, smart additions.
That's a good point. Smart carriers definitely look beyond the bare minimums. Bobtail insurance is a good example. This covers accidents when your truck is being driven without a trailer attached. When it's bobtailing. It's not an FMCSA requirement, no. But it's smart. And usually, it's quite a bit cheaper than having your full primary liability cover that specific situation.
Okay, bobtailing. Got it. What else?
Another big one is physical damage insurance. This is the one that covers your own truck. Protection from collisions, theft, fire, vandalism, even natural disasters like floods or hail. Again, FMCSA doesn't mandate it. But if you financed your truck, your lender almost certainly requires it. They need to protect their investment.
Right. The bank wants its money back if the truck gets wrecked. Okay. So that's the current setup, more or less. Regulations, they never stand still. What are the key changes, the updates carriers need to know about specifically for 2025? This feels important.
You're right. These updates are pretty significant, impacting procedures and compliance. There are three main things to flag. First, MC numbers are being phased out for new applicants. Starting October 2025, FMCSA won't issue new MC numbers anymore. New folks coming in will just use their USDOT number. That's your main identifier with the Department of Transportation.
Okay, so just the USDOT number going forward for new carriers. What about existing MC numbers?
Existing MC numbers stay valid. If you have one, you keep it. And the actual insurance filing process, how your insurer submits proof, that stays basically the same for existing numbers.
So why the change then? Just simplifying?
It seems like it's about simplifying, yes, but also centralizing. FMCSA wants to bring everything under that single USDOT number. It creates a clearer, more unified digital footprint for every carrier. Easier for regulators, insurers, everyone to track compliance and performance history.
Okay, one less number for new folks. What's the second big update?
Second, and this is a big one for cost and operations, stricter driver compliance checks. Insurance companies are digging deeper now when they assess your risk, when they set your premiums. They're looking hard at drug and alcohol violations, a history there. That's going to mean higher premiums, potentially much higher for drivers seen as risky. They're also scrutinizing your CSA scores. That's compliance, safety, accountability, your public safety grades, basically. Poor scores, especially in things like unsafe driving or hours of service violations, signal higher risk to insurers. Result, higher costs for you.
So those roadside inspections and audits really feed directly into insurance costs now.
Directly. And finally, under this point, your company's FMCSA audit history. If you've had violations found during audits, expect to pay more for insurance. It's becoming much more connected.
It really sounds like insurers are getting much tighter access to, or are just paying more attention to, FMCSA data. What does that mean practically for a carrier's day-to-day? More paperwork.
Better safety programs. Both. Really. It's not just about paying more if you have a bad record. It feels like the FMCSA and insurers are collectively pushing for a higher standard across the board. It means proactive safety management isn't just a good idea, it's part of your financial strategy now. You absolutely need solid internal safety programs, continuous driver training, really meticulous record keeping. It's how you prove you're low risk.
Okay, stricter checks on drivers and company records. What's the third major update?
The third one is about process. Electronic proof of insurance. Insurers now must submit your proof of insurance, those BMC 91 or BMC 91X forms, your federal proof of financial responsibility electronically.
So no more paper filings mailed in.
Exactly. It's all digital, which means verification is practically instant, no mailing delays, no paper getting lost. But the flip side is there's zero tolerance for errors. If your insurer submits something with incorrect info, wrong policy number, wrong USDOT number, it could get rejected instantly. And that could flag your operating authority, maybe even delay it right when you need to dispatch trucks.
So speed and efficiency, but you absolutely have to get the details right the first time.
Precisely. It rewards accuracy and punishes mistakes pretty immediately.
It's interesting how these updates, the unified number, the deeper checks, the electronic filing, they all seem to push towards more accountability, faster processes, which brings up the big question. How does all this actually affect the bottom line, the cost of insurance for carriers?
Yeah, that's always the crucial question, isn't it? How much is this going to cost me? And the answer is, it varies a lot. Several factors play a big role. Your driving record, or rather your driver's records. Clean histories generally mean lower rates. What type of cargo you haul is huge, hazmat. Expect significantly higher premiums than, say, general dry goods. And your time in business matters too. Newer companies, unfortunately, usually pay more because they don't have that established safety track record yet.
Can you give us maybe some ballpark figures, just average annual costs for 2025 so listeners have a general idea?
Sure, keeping in mind these are just averages and can vary widely. For that primary liability, you might expect to pay somewhere between, say, $6,000 and $12,000 annually per truck.
Okay, 6 to 12,000.
Cargo insurance is typically less, maybe $500 to $2,000 per year. And physical damage covering your own truck could run maybe $2,000 to $5,000 per truck per year.
So potentially quite a significant operating expense.
Definitely. It's a major cost center. Now, are there ways to save? Yes, potentially. Bundling policies often helps. Getting your liability and cargo, maybe physical damage, from the same insurer can sometimes get you a discount. Hiring experienced drivers with clean records, that can definitely lead to lower rates over time.
Makes sense, lower risk for the insurer.
Exactly. And sometimes just paying your premium annually up front instead of monthly installments can qualify you for a discount with certain insurers. Worth asking about.
Okay, let's talk about the flip side again, but really hammer it home. What's the absolute worst case scenario? What are the real concrete consequences if you don't have the right coverage or you let it lapse even for a day?
The consequences are severe, and they can happen fast. It's not just a slap on the wrist. You could be facing FMCSA fines up to $10,000 per day for being out of compliance.
Per day?
Per day. And your operating authority, you could be suspended or even revoked entirely, meaning the FMCSA literally orders you to stop operating. Business shut down overnight. Beyond the regulatory penalties, think about an accident. If you're uninsured or underinsured, you could be held personally liable for all the costs in a lawsuit. Medical bills, vehicle damage, lost wages. It can run into hundreds of thousands, even millions, enough to wipe out your business and your personal assets.
Devastated.
Absolutely. And just on a practical level, no reputable shipper or broker will work with a carrier that doesn't have proper verified insurance. Your source of business dries up instantly.
So the message seems incredibly clear. The risk of cutting corners on insurance is it's astronomical, not worth it financially, and it puts your entire business existence on the line.
Okay, given all that, given these critical requirements, the new updates, how can our listeners make sure they stay compliant? What are the key steps to avoid those penalties in 2025?
Right, let's focus on the actionable steps. What do you need to do? First, check your current policy limits. Right now. Make absolutely sure they meet or preferably exceed the FMCSA minimums for what you haul and where you operate. Second, set calendar reminders for your renewal dates. Put them somewhere you won't miss them. Lapses in coverage, even just for a day or two while sorting paperwork, can trigger those fines and suspensions. Don't let it happen.
Good practical tip. What else? Third, confirm with your insurance provider that they are filing your BMC 91 or 91X forms electronically. This is mandatory now. And double check the information they have is accurate, your USDOT number, company name, everything. Precision is vital with electronic filing. And finally, look, this stuff gets complicated. Consider working with an insurance broker or agent who really specializes in trucking, someone who lives and breathes FMCSA rules. They can help navigate the complexities, find the right coverage, and ensure you're fully compliant. It can be money well spent.
That makes a lot of sense. Okay, we have covered a ton of ground here in this deep dive on FMCSA trucking insurance for 2025.
Great.
Let's maybe just quickly recap the absolute must-remember takeaways for everyone listening.
Sounds good. Let's boil it down to 4 core points. First, primary liability. It's mandatory. Minimum $750,000 for most general freight, potentially much higher for heavy trucks or hazmat.
Right.
Non-negotiable.
Right.
Second, those new rules are simplifying registration for newcomers. MC numbers are out. USDOT numbers are the key identifier going forward. It centralizes things. Third, compliance is definitely stricter. Insurers are looking much closer now at your safety record, driver violations, audit history. This directly hits your premiums.
Okay, safety record equals insurance cost.
Pretty much.
Okay.
And fourth, remember, costs vary widely. What you haul, your driver's records, your company's safety performance, these all determine your specific premiums. It's not a fixed price.
Okay, and if we just connect this all back to the bigger picture for a second, remember, having the right insurance, it does way more than just check a regulatory box. It's fundamentally about protecting your livelihood, your assets, your entire business future. One single uncovered accident, think about it, that could cost you far, far more than years and years of insurance premiums. It could literally wipe you out.
That's absolutely the bottom line. So really take the time now. Actively review your current policies. Set those renewal reminders seriously. Do it today. And don't hesitate to reach out to an insurance expert who knows trucking. Get advice tailored specifically to your operation. Think of it as an investment in keeping your business safe and running.
So as you digest all of this, here's something to think about. What stands out most to you from this deep dive? What's the one thing you'll be prioritizing for your trucking operations as we head towards 2025 and beyond?